Welcome back to the channel where we uncover the secrets that could save you thousands. Today we're diving deep into 11 incredible tax strategies that most people never hear about. These aren't your typical deductions. These are legitimate but lesser-known approaches that the government doesn't advertise. So grab a notebook, because by the end of this video, you'll have tools that could dramatically reduce your tax burden. Let's start with hack number 1, the Augusta rule. This is absolutely mind-blowing. Did you know you can rent your home to your own business for up to 14 days per year and pay zero taxes on that rental income? It's completely legal and based on a rule originally created for homeowners near the Masters Golf Tournament in Augusta, Georgia. If you're a business owner, you can host board meetings, corporate retreats, or client presentations at your home and pay yourself rent. The business gets a tax deduction, and you receive tax-free income. The key is keeping detailed records and charging fair market rates. Hack number 2 involves something called tax loss harvesting in your investment portfolio. Here's the genius part. You can sell losing investments to offset your gains, potentially saving thousands in capital gains taxes. But there's an advanced technique most people miss. You can immediately buy back a similar but not identical investment to maintain your market position while capturing the tax loss. For example, if you sell an S&P 500 fund at a loss, you could immediately buy a total stock market fund. This keeps you invested while harvesting the tax benefit. Our third hack is the backdoor Roth IRA conversion. Even if your income is too high for direct Roth contributions, you can contribute to a traditional IRA without taking the deduction, then immediately convert it to a Roth. This creates a pathway for high earners to build tax-free retirement wealth. The IRS knows about this strategy, but hasn't closed the loophole because it actually generates tax revenue from the conversions. Number 4 is the home office deduction, but with a twist most people don't know. You don't need a separate room. Any space used regularly and exclusively for business qualifies. This could be a corner of your bedroom with a desk, or even a closet converted to an office. The simplified method allows you to deduct $5 per square foot up to 300 square feet. That's potentially $1,500 in deductions just for having a dedicated workspace at home. Here's hack number 5 that's particularly powerful for parents. The kiddie tax rules allow children under 19 to earn up to $12,400 in investment income before owing any taxes. Smart parents create investment accounts for their children and gift appreciating assets. When sold, the gains are taxed at the child's rate, which is often 0%. This strategy can save families thousands in capital gains taxes while teaching kids about investing. Hack number 6 involves charitable giving with a sophisticated twist. Instead of donating cash, donate appreciated stocks or other investments directly to charity. You get the full fair market value as a deduction, while avoiding capital gains taxes on the appreciation. Even better, you can then repurchase the same investment with cash, resetting your cost basis higher for future tax benefits. This double advantage makes charitable giving incredibly tax efficient. Number 7 is the business equipment expiration deduction, also known as Section 179. This allows businesses to deduct the full cost of qualifying equipment purchases in the year of purchase, up to over $1 million. Instead of depreciating equipment over several years, you get the entire deduction immediately. This includes computers, furniture, vehicles used for business, and even software. The key is, the equipment must be used more than 50% for business purposes. Our 8th hack involves health savings accounts, which offer a triple tax advantage that's unmatched by any other account type. Contributions are tax-deductible, growth is tax-free, and withdrawals for qualified medical expenses are tax-free. But here's the secret. After age 65, you can withdraw funds for any purpose and only pay ordinary income tax, making it function like a traditional IRA. Many people use HSAs as stealth retirement accounts, paying medical expenses out of pocket while young and letting the account grow tax-free for decades. Hack number 9 is the conservation easement deduction. If you own land, you can donate development rights to a qualified conservation organization and potentially deduct several times your cost basis. This strategy is particularly powerful for inherited land or property purchased years ago. The deduction can be spread over 6 years and potentially save tens of thousands in taxes while preserving land for future generations. Number 10 involves timing your income and deductions strategically. Most people don't realize they can control when they pay taxes by managing the timing of income and expenses. If you expect to be in a lower tax bracket next year, defer income and accelerate deductions. If you expect higher income next year, do the opposite. This includes timing stock sales, retirement account withdrawals, and even when you pay deductible expenses like property taxes or medical bills. Our final hack, number 11, is the qualified small business stock exemption. If you invest in qualifying small business stock and hold it for at least 5 years, you can exclude up to $10 million or 10 times your cost basis from federal taxes when you sell. This incredible benefit was designed to encourage investment in small businesses, but many investors don't know it exists. The key is ensuring the business meets the strict qualification requirements from the time of your investment. Now, here's the crucial point. All of these strategies are completely legal, but they require proper documentation and often professional guidance. The government doesn't advertise these benefits because they reduce tax revenue, but they exist within the tax code for legitimate reasons. Some were created to encourage specific behaviors like charitable giving or small business investment, while others emerged from complex regulations. Before implementing any of these strategies, consult with a qualified tax professional who understands your specific situation. Tax laws change frequently, and what works for one person might not work for another. The investment in professional advice often pays for itself many times over through proper implementation of these advanced strategies. Remember, the difference between tax avoidance and tax evasion is legality and documentation. These hacks are all about working within the system smartly, not breaking the rules. The wealthy have known about these strategies for decades because they can afford sophisticated tax advice. Now you have access to the same knowledge. If this video opened your eyes to new possibilities, make sure to subscribe and hit the notification bell. We're constantly researching and sharing strategies that can improve your financial situation. Drop a comment about which hack surprised you most, and don't forget to share this video with anyone who could benefit from these insights. Your financial future starts with the knowledge you act on today.